Do you have this problem where a preview took you a while? Koshka? Oh, there we go. Nishta, nishta. All right, ladies and gentlemen, trade pros, welcome to today's midday update. I do apologize for for being a little bit late to the show. However, we were on a good rant in our elite trading room with our elite traders before I signed off, and so that's why we're in here a little bit later. But that being said, that is one of the benefits of being in our elite room, is that we obviously care for our elite members, and so we give them top priority over YouTube. So let's jump into some of today's news. It's been a really awesome day for our community. George originally came out on YouTube in the morning update and mentioned that we are looking to sell rallies to start the session. And boy, was that the wrong thing to do. And boy, was that the wrong thing to do. But that being said, we are trade pros and we don't stay married to a idea. And so when we go on YouTube and we give our insight for the current session, that is not set in stone. That is just what we are seeing going into the cash open. Of course, as the cash open, or as the equities open, and as you get squawks coming through, things are obviously going to change. Circumstances are going to change. And one such thing like that happened today with that squawk coming from the United States trade representatives mentioning that some of the tariffs that were scheduled to be added onto Chinese imports in September, that those are going to get delayed into December. So while yes, we had a bearish bias to start the session, things happen, and this is why we preach having a new squawk handy, because if you did not have a new squawk handy and you just saw that rally, you would have absolutely no idea what's going on. And so as soon as we heard that squawk, we basically told the room, get out of your shorts and look to get on the long side. And that is exactly what the team did. You guys will see those numbers quite shortly, but it was a great day for our team. So I'm going to stop talking about that. And what I will do is start giving you guys some awesome value. And we will start that off with a quick peek at some of the drivers throughout the U.S. session. Georgie covered a majority of what we heard overnight, and I kind of just spilled the beans with regards to that squawk that we had in the morning. But that was the main driver of today's market. That's basically why we've ripped so heavily. What was our open on the SPOOs? Our open on the SPOOs was 28.77 and we are currently trading at the 29.34 halves. So big press. George actually mentioned on the open he was looking for 29, was it 30? 29.30s, and we were kind of laughing in the room, and that came within the first 15 minutes of trading on the session. So as surprised as we were, but that's the power of having good levels. So for today's U.S. session, a couple of numbers actually did come out. We did have high impact events. Georgie covered that. We had July CPI, the month-over-month figures coming in right as expected, 0.3% versus 0.3 expected. CPI, which is excluding food and energy, the month-over-month figures, that one came in a bit of a beat, 0.3% versus 0.2 expected. And X food and energy year-over-year numbers came in at 2.2% versus 2.1% expected. Couple of other numbers out of the States this morning. July NFIB, Small Business Optimism Index, 104.7 versus 104 expected, so a bit of a beat there. And the July real average hourly earnings year-over-year figure came in a bit of a miss at 1.3% versus 1.5% prior. Couple of other things I'm seeing here. China Global Times editor-in-chief Hu Jian, who's been very vocal. You've heard me mention that name, several times over the last probably 6 months or so. Very vocal. Mentioned that it is hoped Hong Kong can restore order by itself. That is the best end. If the development of the situation suggests there is no such hope, Beijing's intervention will be inevitable. And we also had a squawk coming in from China. China confirming that Chinese Vice President Liu He spoke with U.S. Trade Representative Lighthizer and Treasury Secretary Mnuchin by phone. Will speak again in next 2 weeks. And this is the actual squawk that really drove the markets higher today. Was U.S. announces next step on proposed 10% tariff on China imports. U.S. to postpone tariffs on some items until December 15th, including cell phones and laptops. So that right there, ladies and gentlemen, was likely the reason behind the actual rally here. We don't really look for reasons, because by the time you find the reason why something happened, the money is usually already made, or rather the opportunity is already lost. And so this is one of the benefits of having the news squawk, is that you get this real time as the news drops. It's the same squawk that professional traders use and prop firms, bank institutional traders use as well. Retail does not have this kind of news, or they don't use this kind of news, and so that in itself is an edge right there. That being said, let's jump back into our charts here at this point of this update. You've already got all of the main drivers for the session, and there's nothing really else on the agenda for the remainder of today's session as far as economically scheduled releases. So that covers the drivers, the fundamental part of this update. Let's jump into the technical aspect of it, and let's go ahead and get started. So at this point, you should be seeing my charts up in front of you. And I'm just seeing a couple of comments in here. Luciano, good afternoon. Happy to see you in here. Hope you're doing well. Mahesh, markets will be bearish, trade war. Well, Mahesh, markets were bearish. This was weighing on the markets. However, with this little renewed hope for this meeting and that little delay, that's kind of given a little bit of renewed optimism into the markets. So while the trade war is bearish, yes, anytime you're getting any developments that are giving optimism to the markets, that is likely going to lead to a little bit more upside. All right, so bullish at the moment. If it's going to go back to bearish, that's likely going to be any squawks coming out. So now this gives you a good opportunity going forward. Now that you bring that up, now that we have had some squawks giving us optimism on the market, what you'll want to watch out for is further developments. All right, if you have developments coming in, let's say sometime later in this week, saying China and US meeting or the phone call in 2 weeks, not likely to happen, something happens to that regard, that's going to be bearish. If you have Trump stepping back on that commitment to delay tariffs from September to December, and maybe fast tracking those tariffs, that's going to be bearish. So you kind of got to keep an eye on what's happening in the markets. Overall, a trade war is bearish, but once you're getting the little bits of optimism, that is what gives you those little bits of rallies and that bullish price behavior that we are seeing today. All right, so as it stands, it's a bit bullish market on optimism right now for a resolution to those trade wars, and so that's where we stand at the time being. So now that we got that out of the way, let's take a look at the quote board. And the quote board, as you should be not surprised, is pretty skewed to the bull side on both of these markets. S&P 500 down here, 1.6 million contracts traded, up 1.97% from the previous day's close, which came in at the 82 halves. Last traded price was this 37 quarter, and that is 1.9%. 1.98% daily change. So obviously, just looking at the quote board, you're seeing the volume. Crude, pretty good volume as well, 556,000, returning back to its pre-summer volume. We've been seeing around 550 to 600,000 is what we were seeing on average before the summer months came in, and so nice to see us getting back to that end. So both of these quotes are showing bullish behavior, and that's kind of what we'll take them for. Good volume on both markets as well, so that's also something nice to see. When you get good volume, it doesn't always mean that you're going to get good direction. However, it's usually an indicator that you're going to have some sort of movement, is when you're getting good volume. So that being said, crude and SPOs both bullish on the session. Looking at the pivot charts, crude, just kind of testing its R3 at the moment, which comes in around these 57.20s, I want to say, somewhere around there. So you can see big pop here right off the open, and we're kind of just hanging about at the R3. And S&P 500 as well, nice little pop here. And if we just take a look at this overall, you know, in the overall context of things, you know, SPOOs were bearish, obviously, into that drop. Then we had this little counter trend rally here that broke down, right? And now we're kind of right back up at that resistance structure highs. So this is, you know, even though it was a nice bullish run from these lows back up into this level here, this level remains to be resistance, right? 2940s, right? So it hasn't broken above it yet. So until it does do that, you know, this is resistance. So still looking for a little bit of sell pressure to come in around these 2940s. If we poke our heads back up in there, you can see that's kind of where we had the initial sell off. And so as we approach those 40s, we should start seeing selling pressure come in if they're going to cap this thing at these 40s. If not, we'll just blow right on through them, right into the R2, at which point you can start looking for rotations in there to potentially catch longs. But you know, at this point, that was a pretty aggressive rally, and we're kind of just anticipating a little bit of a range to form between these 2940s and these 2920s at the R1, just around there, since, you know, it was pretty aggressive bull run on the open here. Let's take a look at the actual charts here. This is your crude oil. Just get the volume to minimize a bit. There we go. All right, so that's crude. Crude has just been a big bull today, and you can see we opened at 9 a.m. Yeah, I'm not sure why my chart's doing this, but we opened around 9 a.m. on the pit open, which was right around here. You know, little consolidation before it ripped from, let's call that 54.50s up $1 into these $1.10 into these 56.60s. You guys can see barely any pullbacks. This thing was super aggressive. We did form some consolidation. You know, we did get the pullback, retested those previous highs, sold off again, tried it a third time when we broke out. And what happens in a trending market when you get a break of resistance? More often than not, it comes to retest that level called the roll reversal, RR. So what was previously resistance in a trend, once that breaks, as it rotates back down, it should now become support. That's exactly what you saw here. Pressed into new highs, right? Came back down into that support. Now we're seeing another continuation. So we did break above this previous high, and we are in a trending market. And so, like I just said, highs, previous resistance highs should become support on the way back down. So you can see we did have a bit of a run up into this level. We did just break into it, a little bit of consolidation as support. Now we are pressing up a little bit higher. All right, so let me just clear some of these lines out here. All right, so based on this, you know, the fact that we are kind of around the R3, it is suggesting a little bit of overbought conditions in this market. So while I do think upside is the right side, I do think we might see a little bit of a deeper pullback around this level between here and the R4s. So there's still some room for this thing to go. But, you know, generally as it approaches R3, R4 on a single session, that is usually considered OB, overbought. And you usually get either consolidation or a bit of a pullback. Either one is likely. Oh, I was looking in the wrong time. So now you guys are seeing, you know, a bit of a run up into this resistance. We are finding some support or resistance into that level. We do have support here, so a bit of a consolidation in this level. Ultimately, if it gets back below that level, we might be getting that deeper pullback, and I'd be looking for it to come probably back into this support around these 56.80s if that pullback does happen. S&P 500. Here is the session so far, and just a bid right off of the open, a little consolidation, you know, breakout, just a little bit more consolidating. Have made fresh highs at around 1020 or so, and since then, sellers have kind of been capping this market down. Did come back to the session VWAP, kind of held that level. We're calling this transition back to the long side in the room here. Got that press back on up, and now, as I mentioned, we are coming back into those 40s, and these 40s were a big resistance, as you saw on the pivot charts, and we did see some resistance in this morning session right off the end of that rally. And so now it's going to be interesting to see what it wants to do. Potential for a double top into this region, these 2940s. If it comes up in here, starts to top out and gets aggressive selling, you might be able to catch a potential press back down into these 2924s. Or, if you're going to look to play along with the trend, wouldn't really be looking to buy anywhere in the middle between here or here. I would be waiting for a breakout of that level, let it press on up maybe into those 2950s, 52s, get a rotation back down, look for some support to form, and then look to try to catch that long, since you will be paying a little bit more for it, but your risk is lower because the probabilities are a little bit higher. So that's kind of how you got to gauge those opportunities. And that is pretty much it as far as the analysis. So I hope you guys enjoyed the fundamental bit. I hope you guys enjoyed the technical bit. And now to kind of wrap this guy up, I'm going to show you guys something that I am very proud of today. I'm generally proud with this every day, but today's numbers were just absolutely awesome. If I can just find where I left that. Here. All right, so let me pull this guy up for you, and we'll start wrapping this guy up. If there's any questions, go ahead and pop those into the interactive chat. I'd love to hear what your guys' thoughts are. If you have any questions about us, etc., etc. I do apologize. This thing was up on my screens and it kind of hit itself. All right, here it is. So this is our TradePro Performance Index, and today was a record day for our team, and you'll see why. This is the first time we have had, August 13th here, first time we've had 80% of our room was up on the day. Nobody was flat, and only just under 20% were down. So 80.36% positive on today's session. Huge, we'll call this a huge beat. On average, we've been around 65 to 66%. And, after a couple of tough days, we did have a tough day on the 9th. And other than that, it's been beautiful. Today's day was great, and this kind of is testament to the community, because a lot of people will see our morning update today and see us calling for downside, and they'll be like, oh, you got squeezed, you guys don't know what you're doing, etc., etc. And that's fine. Everyone can have their own opinions. What matters is the results. Are you trading to satisfy your ego to be right, whether it went up or down, or are you trading to make money? If you're trading to make money, this is the place to be, and this is a perfect example of why, because we started out with a bearish bias and 80% of the room finished green on the session. So I think that should speak for itself. That's all I'm going to chime in on that. Great day today. We look to continue strong into the remainder of the week and into the Labor Day weekend, when we should start seeing majority of the volume and volatility starting to pick back up. So that is going to be a sign off for me today. Let me close the screen. Let me get the camera back on myself and give you guys 3 rules into the remainder of today's session. Discipline, patient, and diligent. We did have some good volatility, so in the mornings you could increase or look to take a little bit smaller positions, because you might have to increase your stop size a little bit to adjust for the volatility. So outside of that, you guys know the rules, you guys know the levels, you guys know what the drivers are, and you guys know that we'll be here for you guys tomorrow. If you like this page, and if you comment in the interactive chat and in our comments below, letting us know if you enjoy these and what you want to see going forward, so that we can make sure we're providing you with the best content and the most value going forward. So that's all for me. Good luck and good trading, guys. Take care.